It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today again is the mayor, Mr. Michael Becker himself, smartest guy in the room. How are you, Michael?
Hey, Paul. Doing well. How are you?
I'm doing great. Looking forward to our event coming on September 13th at the AT&T Stadium. Again, it's the Old Capital Multifamily Conference. We're going to have anywhere from 700 to 100,000 people at this event, so we have plenty of space. Michael, anything more to add to that?
Yeah, no, I was real excited about us. It's going to be the second annual. I think we had a great conference last year. We're going to improve on it this year. Like Paul mentioned, we're expecting 700 plus people to come out to this event. It's going to be, to my knowledge, it's the only event in the nation that's focused exclusively on workforce housing, Class B, Class C, any sort of scale and size like we're going to have here. We're going to have all the players across Texas and multiple markets across the country come in. It's all the brokers. So really, if you want to learn and get networked and meet the actual people you need to meet to do this business, this is a great venue. As I mentioned, previously many times, no one ever comes to my office to hand me money or a deal. You got to go out and get it. And this is a great example of that. So not only will you learn a ton, you get to actually meet people and to start establishing relationships with the people that can actually help you become successful and buy apartments. So if you're someone that's actively wanting to do this, this is an event for you to come, whether you're in Texas or whether you're across the country. That was one of the things I thought was great about last year was well over half the people that were at our event were from somewhere else. They weren't from Dallas. They were from Chicago or Los Angeles, San Francisco, New York. So it was great to see the diversity of people that came out to our event.
Yeah, again, we only focus on Class B and C properties. And Michael, how do you get a Class C property these days?
It's very competitive. So it's certainly a team sport. So not only do you have to structure your offer right, you got to make sure that you have all the proper reference points for the broker and the owner of the property, from both having a good commercial mortgage broker like Old Capital on your side, but have the management company. And you got to make sure you can kind of show all the credibility. But then at the end of the day, a lot of it's really intangible that you just got to, these brokers have to know and like you to really kind of push your offer above the next person's offer. So that's one of the great ways of, you just got to establish relationships with these people. And this is a good first step or second step if you already met some of these people.
No, I think the answer I was looking for is how do you get a Class C property these days? You buy a Class A and you wait 40 years.
There you go, that too. But anyway, so in all seriousness, this is a great event. So if you want information about it, the way to sign up for your tickets is to go to our Old Capital Podcast website, which is www.oldcapitalpodcast.com. There you can sign up for that as amongst as get the 17-page white paper that Paul and I put together a few years ago and updated for 2018. So you can find that information there as well.
So Michael Becker, again, who's the smartest guy in the room, who owns over 5,200 doors, over $500 million in commercial real estate, was 15 years with a large national bank before he went from a loaner of money to an owner. So here's a question for Mike. Mike, from your perspective as a lead or a KP at the time of looking at a deal for purchase, so you have your rent comps, how do you review them to determine market rents for your property? Every apartment is different, location, size, amenities, conditions, etc. How do you adjust for everything? What is the system to the analysis?
Yeah, so this is really kind of part science, part art when you're really looking at it. So you're trying to be as scientific as possible, but at the end of the day, sometimes it's a judgment call on some of these, whether it's applicable or if it is applicable, what level adjustments you make for lack of amenities or more amenities or larger unit size or smaller unit size. So some of the things that we look at, obviously, we're trying to pull rent comps within a couple mile radius of the subject property. That's easy to do if you're in a major metropolitan area. That's harder to do if you're in a smaller area. The smaller the location of the city, if you're in Spokane, Washington instead of Seattle, you're going to have less units around you. So you need to probably have a larger geographical search area than you would say in Seattle or in downtown Denver or Dallas or wherever you're located. And then once you get in there, you need to make sure you understand the market. So if you're in this market and you're on the west side of the street and it's much better than if you cross over this one street on the east side of the highway and it's much worse, or north or south or whatever it is, the natural boundaries of that area, you need to make sure that you have enough information about the market to understand that, that this is better on this side, it's worse on that side, this is a different school district. Whatever the reasons are for it to be that way, every major area and every submarket has those little natural boundaries. So you make sure you understand that. And you only take into account that properties that are on the similar pocket to what you're at. So that's kind of first and foremost. Then we try to get within, plus minus 4 or 5 years of vintage of the property that we're looking to buy to all the comps. So try to get as close as possible in the year of vintage, and then kind of really trying to compare amenities that you offer or you plan to offer. So if you're buying a 1980s property in suburban Dallas, like a lot of stuff that we have, and we're looking at other 80s property in suburban Dallas, and they have a real nice pool and a dog park and, package locker system, and we don't. If we plan on upgrading all those assets, our asset, include those amenities, then we can, take that to account as a good comp for me, post renovation. If I don't have the budget to do that, I would need to maybe eliminate that comp or discount their rental rates, because I'm not going to provide the same level of service that this other property is going to have. And then finally, is the same thing on like the interior unit quality. If I'm looking at a property that's been renovated and my plan is not to renovate, then I can't really use that as a comps. But if I'm going to buy this property and then put in black appliances, new flooring, light fixtures, plumbing fixtures, things like that, and make it look like the property down the street, then that's a good justifiable comp. And then from there, kind of got to look at average square footage. I mean, if I'm leasing a one-bedroom unit and my average is 500 square foot, and I'm trying to comp it out with one that's 800 square foot, those, while are somewhat applicable, there's not really apples to apples because the property down the street has much bigger unit size. So if they're getting $800, I might not be able to get $800. So, we try to stay within plus minus 50 square foot average to the competitor properties. That's not always easiest case. It's better in bigger markets. If you're smaller markets, all this stuff becomes a little bit harder. So when you're not perfectly aligned from there, then you got to start making adjustments. And that's kind of the art more than the science to it. So if that property down the street has 150 square foot larger, but it's a one bed, then, one bed and one bed should rent for similar prices, but you might want to give a 5 or 10% discount to your rental rate compared to what they're going to have, because they have bigger unit size down the street. So those are some of the things I just kind of think about. So just make sure you're looking in the right similar geographic areas. Make sure you understand your local submarket. You don't cross whatever that natural barrier is in whatever market you're looking at, going on the wrong side of the proverbial railroad tracks, to use an analogy. Make sure that you look at the amenities offered, the condition of the asset, and the interior finishes, as well as the size of whatever the competitor properties are relative to what your business plan is on your property. And then from there, you'll just need to kind of make some common sense adjustments, either up or down, and try to be as conservative as you can when you do it. And that's really kind of the art and the science of rent comps on a high level.
How much shoe leather will you go through on every transaction? How many actually physical inspections will you do of other properties in and around that submarket?
Yeah, you and your team, or your team should be, first starting with your online resources. So we subscribe to ALN and CoStar and a few other data services. So that's kind of where we start. So these data services survey all the apartments either electronically through the revenue management softwares they have, and or they'll just physically call them every week and get their current rental rates. And then once we kind of do our basic level analysis, once the deal kind of makes sense and we're willing to commit to the deal, that's when we actually go out, or either us personally or someone from the management team will go and shop the comps and make sure that we're, what we see online, the photos that they have online, the property actually looks like it's in good shape and it's, truly a competitor. Make sure that it's not next to like a sewage plant that we're not aware of, or, something along those lines. So you just got to make sure that they really are what you think they are, and that you guys, really feel that it's a true comparable to what your asset's going to be after you buy and renovate your property.
Some great information on that. Would you be open for anybody to give you a call, Michael, and kind of figure out what you guys do at the SPI world? Yeah,
if you guys want to find more information about what we do, the easiest way is just go to my company's website, which is www.spiadvisory.com. That's SPI like spy advisory.com. And there's a contact us page. And from that's where you can fill out the form. And I'm always happy to try to set up a 10 or 15 minute telephone call with listeners of the podcast.
Some great information from the smartest guy in the room, Mr. Michael Becker. I'm Paul Peebles. Have a great day.